With volatility dropping to record lows, it is very clear the bulls are beginning to lose strength. However, the hash ribbon indicator has printed a buy signal for the first time in over 7 months. What does this suggest about the macro price action, and can this indicator be trusted? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the macro charts, going over the high time frame technical and structural levels. We're also going to be talking about the buy signal that was just printed on the hash ribbon indicator. I'm going to be explaining why I believe the hash ribbon indicator is not a reliable source of technical data, and I'll be showing you exactly why that is the case. Along with that, we're going to be going over the smaller time frame charts, discussing the current price action and the next move for Bitcoin. Let's go ahead guys and jump in, but before we do, smash the like button, hit the comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop. If you're interested in joining our VIP channel, we post trading signals with the exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to the main VIP group, you'll also get access to 5 group chats. Our general chat, our trading chart and education chat, our trading setup chat, our news chat, our help chat, and our daily video chat. All of that access, go ahead and contact me via the pinned comment in the free channel for more info. Let's get into the video guys, starting on the market data. How are we looking currently for the 24-hour period? Bitcoin's volatility is sitting at 48 billion, up 23.32% over the last 24-hour period. Open interest up a very small amount, and liquidations are down 26%, sitting at 38 million. As for currently for August, we are up 0.5% on the monthly returns. Moving to the volatility index, the 30-day and the 60-day volatility index. Wow, oh wow, we are heading to absolute record lows. In fact, we are currently sitting at record lows now on the 30-day volatility index, sitting down at 0.86. The lowest we have ever seen for the volatility index over the 30-day period. This is the lowest the volatility index has ever been for cryptocurrency. It is honestly mind-boggling that we are seeing this data. It is insane to be looking at. But like I always say, with decreasing volatility, we do generally see decisive moves come from it. If you think of volatility like a pressure cooker, the more we compress, the tighter volatility, the bigger the explosion after that volatility decides to make a move. We have seen it numerous times in the past, and we will likely see it again. Moving to the 60-day volatility, again, we have seen the 60-day volatility testing record lows for volatility, sitting at 1.55%. Again, record lows on the 60-day. Let's go ahead and move over to liquidations. Liquidations for the 24-hour period, again, 38 million, very evenly split in shorts and longs, slightly more toward that short side. If we do take a look at the price action over the last 24 hours, we can see we have primarily been chopping sideways. We had a decent amount of volatility toward the downside upon market open, and we had a decent amount of volatility pushing equally to the top side, but very much still pushing in this incredibly tight 0.5% range, horizontally above that 29.4k level. Moving on to the DXY, the DXY has officially broken toward the top side, a bullish breakout, resulting in, of course, the stock market taking a small little move toward the downside. But again, the intraday movements of the DXY and the intraday correlation between the DXY and the stock market and cryptocurrency is not as negatively correlated as you think. It is more so the high time frame directions. So the DXY breaking up is not going to immediately result in the stock market crashing, but if the DXY continues upwards and remains above this level, that could facilitate an environment of which the stock market and Bitcoin will either correct a little bit or have less probability of continuing upwards. So we are watching a DXY, and again, the DXY have broken upwards, so we are looking for that next move into this range whilst the price remains above this horizontal and diagonal level. Moving on, the S&P 500 again has taken a little bit of a bounce at the 50 EMA. Again, not too significant yet. At the moment, we have still printed in this high. If we do correct underneath this level, that will be the trigger for a continuation downwards. As we said in yesterday's video, if we do see a loss of that low, a loss of our 50 EMA, that will confirm that we do have the bearish strength required to push the price back down to retest this horizontal chunk of support. If the S&P 500 continues upwards, we do need to break above this local high to actually continue upwards, ideally breaking above these high points. Let's go ahead, guys, and jump into Bitcoin because that is the primary focus of today's video. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. So we're going to start talking about the macro charts, focusing on, first and foremost, the hash ribbon indicator. And as you heard from the intro of today's video, the hash ribbon indicator has officially on the weekly chart printed a buy signal for the first time in about 7 months. The last buy signal we got was all the way back on January the 15th. And now we do have another buy signal printing right over here, of course, that being the 15th of August. Now the hash ribbon indicator, I believe personally, I'm going to explain to you and show you today why it is not a reliable indicator. If we look back in the past, we look back historically, every indicator that is built on moving averages, we can see these are based on SMAs, moving averages, smooth moving averages, have a tendency to alter the levels they print because they are not based on pivots, more based on the average price over a particular period of time. If you have a RSI, the RSI will print a pivot and that pivot will be locked in no matter what the future price action suggests. Whereas when you have indicators that are formulated on moving averages, the future price action can impact the prior data prints. And I'm going to show you an exact example of that. And this is why I do not value the hash ribbon indicator as a reliable source of information. If we go back in time and take a look at the chunk of price action around about June to July 2023, we're going to see a very particular thing. And before I do that, I want to really note down over here, we do not have a buy signal for the hash ribbon indicator. If we go back in time and take a look at this exact block of price action, you are going to see a buy signal pop up. We're going to go ahead and play the price action. You're going to notice a buy signal will print. Let's go ahead and watch. There it is. We can see we have a buy signal printing. And in fact, we had that same buy signal turn over into a pivot to capitulation. This is an exact reflection of how these signals can adapt, shift, and change based on future price action. We had a buy signal print at the top. the candle went down, we opened the new candle, and it changed into a capitulation, deleting the buy signal. And this is the reason why I do not value the hash ribbon indicator, because how many times historically, over the course of the years Bitcoin has been around, over the course of the years that this hash ribbon indicator has given us buy signals, how many times has it given us false flags? How many times has the indicator printed a buy signal only for the later price action to remove that buy signal? It is exactly the same comparison I use with the MACD. Okay, we can see MACD crossovers that are bullish only for a huge move to come after the crossover that then deletes the crossover as if the crossover never occurred. And this is why when I do analysis, I focus on pivot indicators such as momentum, such as the RSI, because when the RSI inputs a pivot, the pivot is locked in and cannot be impacted by future price action. You have a very accurate and very descriptive understanding of what the indicator is suggesting for now and what it suggested at the time it printed. And I cannot say the same thing about the hash ribbon. So a lot of people ask me, Whale, what do you think about hash ribbon? It is not an indicator I use. And in fact, it is not an indicator I trust. And that is why. So let's move over onto the weekly chart and discuss some indicators I trust, some indicators that are valid and some indicators that are worth looking at. The first one being the RSI. If you've been following our channel for quite some time, you know how much I love the RSI. I think the RSI is the most powerful indicator in the whole entire space if you use it correctly. And before I say anything, no indicator can be used solely by itself. You have to use indicators in conjunction with price action, okay, with liquidity levels, and with a combination of everything else. An indicator is nothing more than a derivative of price action reflecting the strength of price action, and the strength of price action is derived from the differences between buyers and sellers and a whole volume of things such as volume, velocity, and all this other kind of stuff. When we're taking a look at the RSI, it shows us two things. It shows up whether or not the asset is overbought or oversold, but it also shows us shifts in momentum. If we're taking a look at the RSI, we are taking a look at a particular level, which is going to be the level of 62.09. Now, the 62.09 level by itself as a number holds no real significance. It's not a magical number. It's not a number that holds significance. More so, based on historical price action, we can see when this level is crossed on the RSI from a horizontal point, we see interesting reactions in the market. And these reactions have been pretty consistent over a period of about 7 years. Every single time we drop below from the top side down, from the 62 upwards down, we end up seeing a high time frame correction in the market. Every single time we break above the 62 from the bottom side up, we see a continuation upwards in the market. And we can show you numerous examples. Let's go ahead and draw our lines in. Even recently, we have a drop from above 62 downwards. We saw a 20% correction in Bitcoin. We saw over here a drop from above downwards. We saw the bear market start. We saw an instance over here back in May 2021. The RSI lost 62.09. We continued downwards to retest a Gaussian channel. We can go all the way back to 2018 when we broke above the 62 on the RSI. We continued quite aggressively upwards, 30, 40, 50% rally. And we can go back in history and see exactly the same thing repeat and reflect for all of Bitcoin's existence. This has been a very incredibly accurate and phenomenal tool at predicting not how much the asset is going to move, but the probable direction the asset is likely to go over an undisclosed period of time. So essentially, it represents the same as what the hash ribbon says. The hash ribbon says it is more likely when we get a buy signal for the asset price to go up for an undisclosed period of time than it is likely for it to go down. The difference between the hash ribbon and the RSI is the RSI, when it does take these buy signals, when it does tell you to sell, it is more reliable historically as the data is set in stone when it does pop up, as is based on price points, particularly pivots, closes of candles, and these closes are locked in stone when they occur. The future price action cannot alter what the candle was 2 months ago or 2 bars ago or even 1 hour ago. Those candles are locked in, and thus the RSI pivots are also locked in. Looking at the RSI right now, we have seen a correction underneath the 62 point on the RSI. You can see it happened a few weeks ago. In fact, ever since then, we have seen a correction toward the downside, a small correction of 10%. Looking at the RSI, if we do break back above is 62.02 point on the RSI, that could be an indication of a continuation upwards. Whilst we remain underneath this level, this is an overall indication of weakness in terms of momentum. This is suggesting we have weakening positive momentum. If we bring up some other key indicators, such as the Marcus IOB, which again is very similar to the RSI, but it is reflective of momentum, we can see on a scale between positive and negative, we have the 0 point here, we have positive momentum. However, we have bearish divergences. We have dropping momentum. We have dropping positive momentum, which is weakening positive momentum. This is a sign of exhaustion. Like we said at the start of the video, the bulls are starting to lose control. They are losing strength, but they have not yet fully lost that strength yet. When will the bulls fully lose strength? If the price fails to remain above the 28.4K level, the upper band of the Gaussian channel, that is when the price will officially flip from weekly strength into weakness. That is when the bears will take control from the bulls and potentially push the prices down. It is a level, it is a zone we are watching. And you're probably thinking, why does that matter? Why does the upper band of the Gaussian channel matter? To understand that, we need to understand how the Gaussian channel gives buy signals and how it gives sell signals. If we're taking a look at the Gaussian channel, what it represents, it shows us the shift in strength between buyers and sellers on a higher time frame. Particularly when we are underneath the Gaussian channel, this is representative of weakness. It is representative of bearishness. It is representative of a downtrend. When we are above the Gaussian channel, this is representative of strength. It is representative of a uptrend. It is representative of bullishness. Okay? When we cross from the bottom side into the Gaussian channel, this signifies a shift in weakness to strength. It also signifies a shift from bearish to bullish. Just as when we shift from the top side in, it signifies a shift from strength to weakness, and it shifts from bullish to bearish. So, although where we are in comparison to the channel is important as it is a descriptive indication, it doesn't reflect the strength of price action. The strength is very much important based on two things. The distance from the band to the price action, this reflects increased strength and increased volatility. We have increasing strength and increasing volatility as we push upwards. This is very much reflective of a bull market. As we push away from the band on the way down, we have increasing volatility, increasing weakness. This is reflective of a bear market. When we break above, this signifies a strong shift in strength and signifies a potential continuation on the macro scale. Therefore, if we break below this level, it reflects a shift from strength to weakness and from bullishness to bearishness. This could potentially drive the prices back through the channel and potentially under it. This is a very bad thing. And this is why I say we are really in this golden pocket, metaphorically, for Bitcoin on the edge of a fence, on a very important decision zone where Bitcoin is going to either make a directional move upwards or downwards. And I'm not here to tell you what's going to happen. I'm here to outline the facts. I'm here to outline the key levels you should be watching at which the probabilities for those particular moves either increase or decrease. And if we're looking for a correction, if we're looking for a continuation downwards, we are looking at this. Let's go ahead and take a look. We are looking at the momentum on the daily. If we're looking for a weekly correction, we need to look at a smaller time frame and see what is happening on the daily to then increase the likelihood of certain weekly continuations. Remember, the weekly chart is a reflection of 7 days of price action. Therefore, if we see weakness develop over 7 days, we then see that weakness expressed on the weekly chart. So if we want to see where the weekly chart is going, we have to look at what the daily chart is doing in terms of buyers and sellers, in terms of momentum, in terms of strength. If we want to see what the daily chart is doing, we have to look at the 4-hour, the 12-hour, etc., etc., etc. So if we're looking for a shift of strength on the weekly chart, we are looking for the price to lose this momentum trend line on the daily. If the RSI breaks below this level over here, that will signify a bearish shift in momentum and will likely push the price not only under 28.4, which is the upper band of the Gaussian channel. I'm going to go ahead and draw it in over here, but also it will push the price underneath this high time frame uptrending support level. That would be confirmation the bears are in control, the price is going down. Until then, we are in a uptrend. I want to make it very clear, until that occurs, the price is in a uptrend. The uptrend is losing strength, but it is an uptrend nevertheless. Everything we have from the macro charts, the 4-year cycle, the weekly indicators are suggesting the uptrend is intact, the uptrend is real, the 4-year cycle is going as planned, but we are running into a roadblock. And the roadblock is putting up a massive challenge that is resulting in the bulls losing strength. The question is not whether the price will continue upwards. The question is, are the bulls able to reclaim the strength to avoid the price moving down? And that is where we're at right now. So if we're looking for a continuation down, you have to be looking for this trigger. If we're looking for a continuation upwards on a macro scale above 32,000, we are looking for the equal and opposite. We are looking for a break above this trend line. We are looking for a positive shift. Right now, we are in compression between these two levels, okay? We are looking for a positive shift. A positive shift in momentum will then increase the likelihood of a break above 32,000 and we'll be heading up to 40 to 38. And that is why I'm saying right now, this level of price action, this zone, this next 80-day blocker period between this converging trend line and this converging horizontal level is going to be a level of indecision and likely a range of which a large directional move will develop from. And until that directional move triggers, it's impossible to say for sure what is going to happen. We can only go off historical data. Historical data will say, whilst we remain above 28.4, we have to assume the price is likely to continue upwards. The historical data will also say if 28.4K is lost, we have to assume the potential for a continuation upwards decreases and the likelihood of a continuation downwards significantly increases. Let's go ahead and end up on a smaller time frame for short-term price action. Bitcoin has been a royal pain. And I said a few days ago, when the market is doing nothing, now is the time to prepare. Now is the time to plan. Do not get disheartened. Do not get dismotivated. Focus on what you can do. And although we did say that, we have to stick to it. The market is absolutely no doubt boring as heck right now. That is a fact. Volatility is all lows. The price action has literally done nothing besides sideways chop. But when in doubt, zoom out. And that is what we're going to do. When in doubt, zoom out. Focus on what you can focus on. Plan for what you can plan. And look at what is obvious. Right now, the zones are very clear. Underneath 28.4, weekly bearish. Above 28.4, weekly bullish. Look at this. Arrow up, weekly bullish all the way to 32K. Above 32K, we are monthly bullish. Keep it obvious, okay? Underneath this level, we are weekly bearish. Perfect. Underneath this order block over here at 29.8 to 30, we are daily bearish. Daily bearish. Above 30,400, we are daily bullish. Perfect. Easy. Nice and simple. Explained it very quickly. Explained it very easily. I'd recommend marking these levels down on your chart. If we look at the current price action right now, we do have a potential descending channel formation. If we do remember back over here, we had this descending channel formation develop over here, which we did break out of and continuation upwards. We can extrapolate that toward the upside. We do have a potential descending channel formation actually developing with the price action right now. Therefore, if we break above this trend line, we could potentially see a continuation upward into that $30,400 level. Again, if we break above 30,400, we are continuing upwards as we enter a low resistance range. The VRPV right over here is suggesting decreasing resistance as the price moves upwards. Right now, we have a whole chunk of resistance, particularly this level of resistance at 30,029.8K. We need to break above that. Until then, if we fail to do so, we are still looking for that continuation downwards into this range. That is still the likely option. That is still the probable option, whilst Bitcoin remains below 29.8 to 30K. Thank you for watching. I hope you all having a fantastic day. And I'll catch you guys in the next one. Cheers.